right, so here we go. This is where we left off. We just entered in our bill for our truck loan. Okay. So now the next thing that we have here is that we need to replenish the petty cash drawer. Okay. So here's a little petty cash ledger. We have the dates here of what happened to the petty cash drawer. So we had the owner take some money out, the Irene take some money out, and Albert. All right, and here's the reasoning why. Here's the receipt amount. So how do I replenish the petty cash drawer? Checking and petty cash. Are we increasing petty cash or are we decreasing petty cash? No. Because right now the petty cash drawer is at 500. So if I debit my petty cash, then I'm increasing it.
Wait, is it like I want to say we don't run it or we don't touch petty cash because that's someone else's job or
In this case, um, in this case, we still need to cut a check to the petty cash drawer because we're reimbursing it, right? We're replenishing it, right? We need to put cash in to the petty cash drawer because right now there's it's a bunch of receipts and leftover money. So in this case, this is a transaction that is an adjustment that is for the entire business. It's part of the business. So how should we replenish the petty cash drawer? Okay. This is chapter 10.1. Actually, sorry, this is chapter 9. So when we have a petty cash drawer, right now, the petty cash drawer has a balance of $500 in there, right? But if you remember on the 23rd, the owner, Irene, and Albert decided to take money out of the petty cash drawer to buy stuff for their grand opening party. Okay, so if they took money out from the petty cash drawer and then they came back with the receipt, now the petty cash drawer is full of receipts and leftover cash. But the balance is still $500. How do I replenish the petty cash drawer? Anybody? Okay, so if I have the petty cash drawer full of cash and receipts, how do I put that money back into the petty cash drawer?
I'm trying to look for the accounts, but it's a bunch of accounts and then checking, right?
Yes, it's a bunch of accounts and then checking because we have to recognize these expenses, right? Now, out of all of the expenses, what would make the most sense? You're buying you're buying supplies for a business party, for the grand opening party. Which account would make the most sense? It's not office supplies.
Would it be business expense?
Business expense, yes, because this is for a business party, right? It's being covered by the company. So in this case, that's correct. We are going to recognize that we made a business expense. Excuse me. Okay. So let's see. I think that's what, 6,400. Oh, 6,200. And then we have to cut a check, right? Because we need to put the money back into the checking account, back into the petty cash drawer. Okay. So in this case, right, what is my total amount of business expense did I incur? Or did they incur? Because we bought pizza, we bought a cake, and we bought party supplies. How much in grand total is my business expense, and how much money do I need to put back into the petty cash drawer to make it $500 again?
282.78.
282.78. Okay. Right. So here we need to add 187.16 for the pizza, plus 23.80 for the cake, plus $71.82 for the party supplies to get 282.78. I'm gonna double confirm that. 187.16 plus 23.80 plus 71.82. 282.78. Okay. And then my description.
Would you just put replenish petty cash or
Correct. Or, I mean, yes. Replenish petty cash. Right? So because in this case, right, you actually have to cut a check out because they have to go into the actual bank to get the exact change. All right? You can't just go to the ATM and be able to do this. So you need to cut an actual check. So for $282.78. And then in this case, right, whoever's in charge of the petty cash drawer, you would write their name. So check number 1533. Okay. So now we got to go to our ledger.
Yeah.
We just incurred some business expenses. Okay. I think we're on the 23rd journal. Let me check here. Yes, we are. Okay. And it was for it was for the 282.78. So what is your grand total here?
$1,272.78.
Okay, 82.78. Good. Okay. And then we need to cut a check. Okay. So you should have now $13,142.50 even. Okay. Then it says estimated allowance for doubtful accounts. Okay. You must record based on 5% of accounts receivable balance. Okay. So in this case, it is estimated that 5% of your accounts receivable is going to be uncollectible. How do you determine how much is in your accounts receivable?
In your general ledger.
Yes, a general ledger. Right? Accounts receivable is $1531.95. How do I create an estimate on this?
So it's 5% of that.
Uh-huh.
Uh, would it be 7660?
Good. 7660. So in this case, right? How do I journalize this? I'm estimating the amount for doubtful accounts.
Yeah, allowance of doubtful account, and then account receivable.
Not accounts receivable because do we know who?
No.
If we don't know who, right? It's a general assumption that someone out of those the people who owe you the money, out of all your customers, right? Someone's gonna fault on a payment, but we don't know who and we don't know when and we don't know yet how much. So in this case, I'm making an estimated amount. So where are you going to be taking it out from? Allowance for doubtful accounts is correct. But what is the other account?
I want to say checking, but I know that does not sound right.
No, it's definitely not checking. You're not taking it out during a checking because, again, if this is coming out from the account receivable, do we ever receive the money in the first place?
No.
No. Here's a hint, right? It's an estimated amount. Go ahead. It's an end of the year adjustment.
Bad debt expense?
Correct. Bad debt expense because we don't know who's gonna owe us the money, right? Or who's gonna fall on their payment, and we don't know when it will happen. But this is roughly a price of doing business, right? We have to assume that at least like not everybody is going to be, you know, 100%. You can't trust people when it comes to letting them borrow money, right? It's the high risk of doing business that there is a possibility that you might not get your money back. So in this case, right, it's an adjustment entry, right? We learned about that too, and we call this the bad debt expense. Okay. So what account numbers are these? Bad debt is 65,000, and the allowance for doubtful accounts is 11,100. Okay. And then my note here or my description.
Is at the end of, um,
If you just put allowance, estimated allowance of doubtful.
Sure. Which is going to be 5% of accounts receivable. Good. Okay. So let's go ahead and update our journals, our ledger. Here's my contra account. General Journal 23 for the credit amount of the 7660. Remember, this is a contra account. Go. Bad debt expense. 5% of AR. $76.60. Good. So then the next section here, right, we're going to be starting depreciation. Okay, so here we need our depreciation tables. Okay. So first thing that we have here is to calculate the first month of depreciation on the truck. Okay, it has a mileage of 150,000 miles before it needs to be maintenance. Okay, no salvage value, and the useful life is 7 years. Okay, and this month we drove a total of 1,200 miles. Okay. So, of course, I told you to go ahead and get your depreciation tables out earlier. So, let's take a look at my truck. Okay. Here's my depreciation table, right? The asset is a truck. What depreciation method are we going to be using? If I want to calculate depreciation, right? And I said that it can have mileage up to 150,000 miles, and you drove 1,200 miles. Which depreciation method are we using?
Would it be unit of production?
Correct. Right? Right? We know no salvage value. It's $0. We know that it can drive up to 150,000 miles. And we know that it should last up to 7 years. Right? Now, two other components we need is the asset cost and when we placed it into service. Okay? So where can we find that information?
Wait, what was the question?
So we're missing two more components, right? We're missing the asset cost and the day that we place into service.
Would it be in the general ledger?
Correct, right? You go to the ledger and let's go to our truck. Okay, here it is. This tells me the details on my truck and how much it's worth right now. It is worth $32,208.90. And when did we start to place this into service? What's the assumption here?
In January?
In June. In June.
Oh, in June. Sorry.
What date?
8th
Yes.
or 1st.
The 8th, because in this case, right? The minute you drive off the parking lot, the day that you buy it, the minute you drive off the parking lot, it immediately depreciates. So in this case, right, we are going to depreciate it as of June 8th, which in our assumption is we need to do for the month of June. And the truck is worth $32,208.90. Okay, 32,208.90. Okay. So now we need to go ahead and plug our numbers in. So for the month of June, how many miles did we drive? We drove 1,200 miles, right? All right. So now we have to solve for the rest of the equation and formulas here. Okay. So starting with the first one, how much is my depreciation basis? Or what is my depreciation basis?
It would be the asset minus the salvage, which is still um, the full asset cost.
Good. Okay. Now in this case, I need to solve for my per unit rate. How do I solve for my per unit rate?
Would it be the basis divided by the 1,200?
Not the 1,200.
Oh, the 15.
The fifth, yes. The 150,000. Yes. So in this case, how much is that?
$0.21.
21 cents, okay? So in this case, I'm going to expand that because it's definitely more than 21 cents. Okay, so it's going to be 21,472.6. So we need to calculate, right? If I drove 1,200 miles, that means per mile that I drive, it's going to cost me 21,472.6 cents. So in this case, if I drove a total of 1,200 miles for the month of June, how much is going to be the depreciation expense?
$257.67.
Good. Cumulative depreciation is 257.67. So therefore, how much is my book value?
$31,951.23.
Good. Okay. All right. Now, in my journal, I'm going to go ahead and have you guys fill it out this way. I want you to start making a list. Okay. Right? What account would I be putting? How do I journalize this transaction?
Would it be truck and accumulated depreciation truck?
Okay. In that case, the rules of depreciation, right? You cannot change the value of the actual asset, right? Due to the historical cost. So in this case, you're not taking it directly off of the truck. However, we've created a contra account to decrease the truck value through accumulated depreciation, right? So that part's correct, but what is the other part?
Would it be depreciation expense?
Correct. Depreciation expense. Okay, now in this case, I'm going to make it much more easier on you. I just want you to make a list of all of the accumulated depreciations because at the end of the day, you're all dropping them all into one account, which is the depreciation expense account. So in this case, just go ahead and make a list of every single depreciation that I've asked you to compute. So let's figure out what the depreciation expense account is. Depreciation expense is account number 66,000 and accumulated depreciation, right? For the truck is this one right here, 17,011. Okay? And we know so far that the accumulated depreciation for the truck is 257.67. Two, oops, 267. Wait. what was it? 257.67. So let's see what the next one is going to be. Now it says that we must calculate 1 month of depreciation for both coffee brewers, okay? The first brewer that we bought has a life remaining of 3 years, no salvage value. And then the second brewer has a useful life of 5 years, no salvage value, okay? And we here right here I tell you exactly to use straight line. Okay? So let's go ahead and go to our depreciation table. And we need to look up for our coffee brewers. Here we are. Okay, so coffee brewer number 1, coffee brewer number 2. What is my asset cost for the first coffee brewer? How do I find my asset cost for my coffee brewers?
In the general ledger.
Yes. Okay, so coffee brewer. Here we are, coffee brewers. Coffee brewer number 1, okay, which we purchased on May 31st, okay, says that it is worth $1,900. Okay, so that's our first one. $1,900. We know there's no salvage value, and it had a useful life of 3 years. Okay, we're using straight line. Okay, and if I bought it as of May 31st and I recognized it, right, on June 4th, what is my assumption? When did I place it into service?
In the month of June.
Right, because the assumption is it's all ready to go, right? The first thing you need to do is you're going to check to make sure it works. So that means you're going to have to turn it on the day that you bought it. Or in this case, we didn't have the place until June 1st, June 4th anyways. So this, and our assumption here is the day that we had the store for the first one is going to be the day that we actually are going to depreciate it. So June 4th. So in this case, that means I'm going to depreciate it for the month of June. What is the cost of my second coffee brewer? What is the cost of my second coffee brewer?
It would be that 2060 627.95 minus the 2266.
Good, right? Which we did compute that on the other side here. So that means my second coffee brewer is now worth $2,605.29. Okay. 2605.29. 2605.29. Okay. Again, no salvage value. It has a useful life of 5 years. And what's the assumption here? If I purchased it, as of June 10, right? The assumption is that we're going to plug it in to check to see if it works. So our assumption is that we placed it into service as of June 10. So therefore, do we depreciate this? Yes or no?
Yes.
Yes. All right. So here we go. Let's go ahead and do the first calculation here, and then we'll solve for the second one. So June. How do I solve for my depreciation basis?
It's the cost of the asset minus the salvage value, which there is none. So it's 1900.
Good. What's my depreciation rate?
0.3333.
Good. Why run over its estimated useful life of 3 years? Gives you 33 cents each. Okay. Now, how much depreciation expense am I going to incur?
It's the same, 33.
What do you mean?
Oh, no, never mind. Sorry. It's depreciation basis times rate.
Good.
$627.
Okay, I didn't get 627. I got 633.33. Okay. Now, is this depreciation expense for the whole year or for the month?
For the month.
Well, that's what we're solving for.
For the month.
Right, we need to solve for the month, right? In this case, this is $633.33. Your asset cost is $1,900. If you're going to depreciate $633.33 now, how many more months can this machine last? So is $633.33 for the whole month or for the whole year?
That's for the whole year.
Yes, so how do we solve for just the month of June?
We divide that by 12.
Yes, so in this case, and what do we get?
Will be 52.75.
$52.78. Okay. Which will bring your asset to have a book value of $1847.22. Let me double check this. So in this case, if it is 1 divided by the estimated useful life of 3, okay, this is going to be the 1900 times the 33 divided by 12 to make it 52.78. Okay. So now we need to solve for the second one. Okay, so again, we're solving for the month of June. Okay. How much how do you solve for the depreciation basis?
asset cost minus the salvage value.
Okay. Okay, in this case, what's my depreciation rate?
One divided by five, which is just 0.20.
Okay. So what's my depreciation expense going to be?
$43.42.
43.42. Right? We're just gonna give me a book value of 256187. Okay. So in this case, I have two values here that I'm going to just add together on the side here. So I'll just put it right here. So the depreciation expense for my first coffee brewer is the $52. And my second coffee brewer is going to be for the $43. So in this case, grand total to be $96.20. Yes, question?
Okay, on the first coffee brewer,
Uh-huh.
I don't know what's wrong. Like, I'm using my calculator and I'm not getting the same amount um for the depreciation expense.
Are you using just 33? Because it should be 3.
Okay, hold on. Okay, yeah, then I'm getting the amount you got.
Okay.
All right.
Mm-hmm. Good. So we should have $96.20 worth for the coffee brewer. Okay, so journalize this. We got the coffee brewer, grinder, computer, printer. So let's focus one on a time. The coffee brewer, the accumulated depreciation for the coffee brewer account is going to be 15,011 for a total of $96.20. Okay. So let's see what the next segment says here. It says that we need to calculate 1 month depreciation for the coffee grinder. Coffee grinder has 5 years life, straight line, and it has no residual value. Okay. So let's go ahead and find out what, let's go ahead and take a look at the depreciation table for the grinder. Okay. go. We're using straight line. All right. No residual value. Has a useful life of 5 years. So let's go ahead and determine how much my total cost for my coffee grinder is. Okay. Coffee grinder, here it is. What's my total coffee grinder amount right now? How much is it? How much does it cost?
It would be 4,145.57.
Good. 4B1 4557. Okay. And when is the date that you placed into service?
And the 15th,
We completed it on the 15th. So what does that tell me?
that would be the half of the month. So would that be for next month? Or
Is it okay? So it'd be the first all the way to the 15th, and the 16th all the way to the 30th. So in this case,
this month?
it just made the cutoff line. So in this case, we are going to depreciate the coffee grinder for this month. So what's the depreciation basis here?
The 4,145.
Good. What's my depreciation basis?
120.
Right? It'd be 20%. Not 20 cents. It should be 20%. Okay. So then how much depreciation expense is going to be for for June?
Oh, 6909.
6909. Okay. 6909. All right, and we're going to plug that into our journal here. 69. Oops. 69. 69. $69.09. Okay. And then let's see what the next one is. Okay. Now it says here that we're going to calculate 1 month depreciation for the computer, printer, and cash register. Okay. They all have 5 years life. We're going to do double declining, no residual value. Okay, for the computer, printer, and cash register. So let's go ahead and do our first one, which is the printer, or I mean the computer. We're going to be doing double declining. Okay. It has a estimated useful life of 5 years, no salvage value. Okay. And let's go ahead and solve for the asset date and the cost. Okay. So once again, go to your ledger, accumulated depreciation computer. Here we are, computer. How much is the computer right now?
1,834.84
And when did we buy it?
on the 5th of June.
And our assumption is if you buy it, you need to plug it into a wall to make sure it works. So we used it and placed it into service as of June 5th. So for 1834.84. Okay. So we're doing this for the month of June. What is going to be my depreciation basis?
Uh, 1,834.84.
Okay, good. Because it's going to be the beginning of the year's book value. Okay. What's my depreciation rate going to be?
Point 40.
Yes, so it's going to be 1 divided by the estimated useful life times 2, which gives you 40% or 40 cents. So what is going to be my depreciation expense for the month of June?
Uh, 61.16.
6116. Okay, 6116. Okay. So 6116, so let's go ahead and plug that into our journal real quick. Oh no, did I put the wrong numbers in the wrong spots? Okay, so here, we're doing the computer. Okay. The accumulated depreciation account for the computer is going to be 1411. For 6116. Okay, so there you go. You got the the computer. Okay, so now let's go ahead and do the printer. So printer, once again, we're still doing double declining. I'm going to put DD for short. Okay, it's got 5 years life, 0 residual value. So let's go ahead and determine how much the printer cost us. Okay, the printer is worth $378.87. 378.87. And of course, we bought it the same day as the computer. So there you go. Our first assumption is we need to plug it to the wall on the first day. Okay, so what is my depreciation basis?
The 378.87.
Yep, it's going to be the beginning of the year's book value. Okay. What's my depreciation rate going to be?
A 0.40.
Good. So what is going to be the depreciation expense for the month of June?
A 1263. Oh,
Sorry, hold on. Good, 1263. $12.63. Plug that in my journal. Okay. Now we need to do the register, right? Double declining. 5 years. No salvage value. Okay. So let's go ahead and solve and figure out what my asset cost for my register was. Here you go. Register is at $649.49. And when's the day that you place into service? The day that we bought it, right? Is that we had to plug it in and make sure it works. So our assumption is we are going to be depreciating for the month of June. So depreciation basis. Right, beginning of the year book value at $649.49. My depreciation rate is going to be 1 over its estimated useful life times 2. So therefore, what should be my depreciation expense for the month of June?
2165.
2165.
627.84.
So $21.65. Okay, so let's see what's next. Calculate 1 month depreciation of furniture, 7 years. Okay, straight line, no residual value. So in this case, it's furniture, right? Furniture is going to be your bistro tables and chairs, your counter, desk set, and display shelves. So we're going to do all 4 of those under 7 years of life and straight line. Oh, the wrong one here. Okay. So tables, here's tables, right? We're doing straight line. Useful life 7 years. No residual value. Okay, so let's go ahead and determine how much our tables and chairs are worth. So here you go, bistro tables and chairs. For $6,605.08. 660,508. And of course, the date that you placed it to service. When did you buy the machine? When did you buy the furniture?
On the 8th of June.
Okay, good. And if we bought on the 8th of June, our assumption is um, it's already ready for service, right? You just sit on it. Okay. All right. So that means for the month of June, what's my depreciation basis going to be?
The 6,605. Oh wait.
Good, right? All right. What's the depreciation rate?
0.14285714.
Good. So therefore, how much depreciation expense is going to be for the month of June?
$78.63.
$78.63. So my Bisa tables and chairs is 78.63. Excuse me. So that was what, account number 13011 for the tables for the 78.63. Okay. So let's go ahead and solve for the next one, which is the counter. Right? We're doing straight line. Okay. 7 years, zero residual value. So what is my asset cost for my counter? Let's go ahead and take a look. My counter is $1193.22. And we got it on June 7. So my depreciation basis is going to be
1193.22.
rate's going to be 1 over estimated useful life. And what is the depreciation expense going to be for?
$14.21.
$14.21. Okay. $14.21. Next is the desk. Seven years resists, 7 years, no residual value. And we're doing straight line. Okay, date that we placed into service. Okay, here you go. Desk set is $658.37. 65837. And with the date that we placed into service is as of June 7th. So what is depreciation basis?
$658.30.
Okay. 1 over its estimated useful life. Okay, so what is going to be the depreciation expense for the month of June?
$7.84.
$7.84. Make sure you know that's expanded. $7.84. Okay. And I believe it's account number 13031. Okay. We got display shelves to complete. Display shelves, display shelves. Once again, we're doing straight line. 7 years. No residual value. The counter is 57708. 57708. And the date that we placed into service, June 7. So, depreciation basis So then again, depreciation rate.
The
Mm-hmm.
14.687 is the depreciation expense.
Good. $6.87. Okay. Let's see what the next thing says here. And then it says to go ahead and do 1 month of amortization for goodwill. So that means this journal can go. Now, in this case, right, depreciation and amortization is very similar to each other. So go ahead and, since we're already on the depreciation table, all the way to the end should be your goodwill. So you can go ahead and do goodwill, okay? Amortization method is amortization, right? Let's see what it says here. It says that you're going to amortize 1 month of goodwill, and it's worth 15 years. Okay? So again, useful life is 15 years. Again, there's no residual value. And the date that you bought it, or the date that you placed into service, is going to be, let's see what the goodwill was. Goodwill. Which I'm going to say is June 4th, was really May 31st. It's okay. I guess you could put May 31st. That means you got to depreciate it for the month of June anyways. Okay? Or excuse me, you're going to need to amortize it for the month of June. So in this case, it is currently holding a value at $2,100. So what is going to be my amortization basis?
2,100.
It acts like straight line, so it's 2,100 minus your salvage value, which in this case there is no salvage value. So that means it's going to just be whatever the asset cost is. Okay. What is the amortization basis?
0.06666.
Okay. And then, so what is going to be the amortization base expense as of June?
$140. Oh wait, hold on. Divided by 1167.
Good. Okay. $11.67. Okay. And because amortization is a completely separate thing, right? It is not the same as a depreciation expense. So we have amortization expense, and we have the accumulated amortization for goodwill for $11.67. Oop, I think I'm supposed to I didn't leave space for the description. I'm just going to insert. Okay, for 1167. Okay. So let's go ahead and finish off everything and plug everything in. What is my total depreciation expense? Since I haven't solved for that yet. So depreciation. How much is your total depreciation expense?
$625.95.
$625.95. Good. Okay. Let's see. We didn't do the 13041. What is amortization expense account? All right, you can see here. I'm going to put a note here. Depreciation for month of June. And then the amortization account. Amortization is 66500. And then the accumulated amortization for goodwill is 19101. Okay. And I'm going to also write here amortization for month of June. Okay. So let's go ahead and place all of this onto your ledger. Okay. Starting with the first one, which is your depreciation expense account. Depreciation of all fixed assets for month of June. General journal page, I think we're still on the 23rd. Yes, we are. Okay. So for the total amount of 600, 625.95. Okay. Now one by one, you're going to go through all the accumulated depreciation expenses. Or yeah, all the accumulated depreciation. Okay. Starting with the first one is our truck. So accumulated depreciation for the truck. I'm just going to put adjustment entry because it's pretty straightforward. For a credit of $257.67. Okay. Next one we have is the coffee brewer and the coffee grinder. So here's the brewer. For the $96.20. Okay. Then the grinder is for $69.09. Okay. Next is the computer. Here it is for the computer. For $61.16. Then you have the the printer for $12.63. Then you have the cash register for $21.65. Then you have the tables and chairs for the $78.63. The counter for $14.21. You have the desk for $7.84. Okay. And then the shelves for $6.87. Okay. Now we need to do the amortization expense. I'm going to go ahead and just do the accumulated amortization here since we're already on the assets. So under goodwill, you have your amortization for goodwill. For $11.67. And then of course, last but not least, go to amortization expense, which is right under depreciation. Amortization of intangible assets for June. To be $11.67. Okay. Sorry about that. Okay. All right. Right now it's 10:15. Okay. So now we finished all of our depreciations and amortization. So now we have a couple more transactions left to do. So here we need to adjust our office supplies. Okay, because right now we have approximately $80 worth on hand. Okay, so if I have $80 worth, how do I adjust my office supplies? How do I adjust my office supplies?
Is it saying like we just bought $80 worth of office supplies?
Well, in this case, we did not buy, right? We have $80 worth on hand, meaning someone went to the office supply cabinet, counted all the supplies, and said that we have $80 worth left.
So would you just use office supplies and office supplies expense? Or?
Correct, right? In this case, it's the opposite, right? You would use office supplies expense because this tells us, right, that we used some of the office supplies. Okay? Because it's an expense. We got rid of it. We used it. We no longer have it. And then, of course, we need to adjust our office supplies because the value in my office supplies is no longer what I have because I end up using the supplies. So in this case, I have $80 on hand. Now, let's go ahead and go to our ledger to determine how much office supplies we have in the first place. Okay, so I'm going to scroll to our assets. Okay, how much office supplies do we currently have?
150.
And it says that we have $80 worth left on hand. So how much did I actually use?
70.
We used $70 worth of office supplies. So in this case, $70 worth of office supplies. So office supplies is account number 11,800. And office, oops, oh, I missed them. 11,800, and our office supplies expense account is account number 6750. 6750. Okay, $70. Okay, and of course, I'm gonna make a little note here to say that I am adjusting supplies used in June. Okay. So, since we're already here in my office supplies account, it is June 30th, and I'm making an adjustment. Okay. It is page 23, and we're crediting our office supplies by $70. So therefore, my ending balance in my office supplies should resort to $80, which is what I already told you, right? I told you that there's $80 worth on hand left remaining. Okay? So therefore, I'm going to go to my expenses because I have to update my office supplies expense. Okay. Here you go. Office supplies expense. Used office supplies in June. General Journal 23 for $70. Okay. And of course, this right here is definitely not enough space to do the next transaction. So that means the last two transactions, I'm going to go ahead and do it on the next page. Okay. So let's see what those things are. We have two more transactions. We need to accrue for Irene's wages, okay? She worked a full week, meaning 5 days, okay? How do we accrue for Irene's wages? She's earned some money, right? But are we paying her now?
No.
So if she's earned money from us and we're not paying her now and we're gonna pay her later, what does that mean?
You don't journalize it, right?
In this case, we need to make sure that all of our expenses that have been incurred are in the month of June. So in this case, if I have to pay somebody for the month of June, or at least recognize that I owe somebody in the month of June, though that's for the payroll period for the month of June. I don't know if that makes any sense. Let me repeat that. So so in this case, right, this is because she worked in the month of June. We need to recognize that we owe her money.
liability?
It's a liability. Correct. Now, in this case, right, if we owe her money, which account is the assumed account that we have to pay or that we owe her?
Is it payroll expense?
It is a payroll expense or a payroll liability. Which can you be more specific?
Payroll and salary payable or
Good.
salary wages.
Mm-hmm.
Okay.
Good. So, because this was an expense I incurred that month, right? Because she worked for us in June, right? So, therefore, you need to recognize the expense at hand. However, because we're not paying her today, we're choosing to pay her later. So, there's 4. We need to use salaries and wages payable. Okay? Now, in this case, right? Do I need to calculate her federal taxes and her withholdings, her FICA?
Yes.
Why? Is her payroll period today? Does it end today?
No.
No. She still has to accrue and earn money for 1 more extra week. So in this case, we can't calculate the FITW or the OASDI and the Social Security, the Medicare, because she's not done earning money. She still has more money to keep collecting, and we can't miscalculate because we can't just say this is her check now and then this is her check later. No, because it's based on a bracket, remember? It's based on how much a total gross income she has earned. So in this case, right now, no, we do not need to calculate her federal income tax withholdings because 1, she's still earning more money, and 2, she it's not her payroll period has not ended yet. You cannot accrue federal taxes if they're still continuing to collect more money because you don't want to miscalculate and put them in the wrong bracket. So in this case, nope, there's no need to because she's not done with her payroll period yet. So in this case, we only are just recognizing that, hey, we owe her money. So then when the next payroll period ends, right, and we have to pay her, we are going to recognize the payroll, the salaries and wages expense for that week in July. And then we're also going to undo the salaries and wages expense or payable for the month of June. So in this case, right, this is all I'm recognizing is that this month, this is what I owe this person because she worked the month of June. I need to accrue every expense as possible for the month of June so that when the month of July rolls around, right, we're starting off completely fresh. Okay, we don't have pending transactions here, or we don't have any other stuff like that because in this case, she's worked in partially June and she's gonna work partially in July. So in this case, that's what you have to do is you're going to just recognize that for the month of June, this is what we owe her. Okay? So, let me check out those account numbers. So salaries and wages expense is 6810. And then we got a liability for the salaries and wages payable for 2410. Okay? Now, in this case, how much do I actually owe Irene?
would we look in the subsidiary?
Yes, you would definitely need to look in the subsidiary. So subsidiary, right? Irene is an employee. She earns $8.50. So right now, when is her next due date? When is her next payday? It's going to be July 12th. Okay. Again, it's for Irene Jameson. We pay her $8.50 an hour. So far, right? Just to accrue for now, right? She's worked a total of 5 days. Okay? 5 times 8. Okay? Because she worked a total of 1 week, right? Which is 5 days. So she's earned at least 40 hours. So in this case, how much do we owe Irene for the month of June?
352.
352. I got 340.
Oh, it's because I put 8.8 instead of the 8.5.
Okay, no worries. Okay. So $340 is what I owe Irene for the month of June. Okay. So I'm going to go to my journal and recognize that I owe her $340. Okay. And I'm also going to write here that we are accruing to accrue Irene's wages for June. Okay. So let's go ahead and put this in the ledger. So expenses. Here is payroll, salaries, and wages expense. We're on the 24th page here, and we owe her $340. So what's my total ending balance in my salaries and wages expense account?
$884.
884. Good. Okay. Liabilities. Let's see how much. Let's see. Oh, I missed it. Sorry. Payroll liabilities, salaries, and wages payable. Right. Accrue for Irene. For $340. Okay. Last transaction is go where we need to do is we also need to accrue for Albert's commissions. So in this case, Albert's commissions, right? If we are just accruing, right? We're not paying Albert just yet. It's going to be the same similar accounts, right? We're going to recognize that we have the expense for the month of June, but because we're not paying Albert now, we're going to pay him later. We're going to use commissions payable. Okay? So again, account numbers for commissions payable is 2420 and payroll for commissions expense is 6820. 68.20, 24.20. Okay. Now in this case, how much do I owe Albert as of today?
We looking this up today.
Yeah, let's go ahead and take a look at the commissions, right? So right now, how much do we owe Albert? Right? He hasn't completed the last one yet because that's not scheduled till July. But as of today, as of June 30th, we owe Albert $271.78. I'm going to highlight it as another color just so that I can recognize that this amount right here for the 271.78 is not what I'm going to pay him on the pay date. This is just to accrue. Okay, so in this case, I owe currently Albert $271.78. $271.78. $271.78. Okay. And then I'm gonna go ahead and put a note here saying that we accrued Albert's earnings or commissions, which is 10% of sales. Okay. And because this is going to be the last transaction for the month, right? Or to wrap up, this is the last adjustment. I'm going to go ahead and block off this area because now we need to prepare for our adjusted trial balance. Okay? Which we're not going to do today, we're going to do it tomorrow. Okay? So right here, adjusted trial balance. Okay? So if we make a mistake, our mistake is going to be between our adjustments, okay? Because everything should actually be, there's equal transactions here. So that means if we find a mistake, the mistake's going to be within these last couple transactions that we just did, okay, for the adjustment entries. Okay. So I'm going to go ahead and save this. And let's go ahead and transfer our information to our ledger. Okay. Since we are already on our liabilities, I'm going to go ahead and just fill this in here. All right. Accrue Albert's commissions. Okay. Oh, nope. General Journal 24. For a total of $271.78. Okay, $271.78. Okay. And of course, last but not least, we need to fill in our commissions expense account right here, commissions expense. Accrue Albert's commissions, 10% of sales in June. And it was for $271.78. So what is my total ending balance in my commissions account?
$411.96.
$411.96. Okay. Good. So now the next step that we have to do is going to be to complete the adjusted trial balance. And once we have that, then everything's going to trickle down and we're going to go ahead and do the financial statements tomorrow as well. Okay. But as far as closing the accounts, we'll just save that for the following week. Okay. So, all right. Other than that, this is where we're going to stop for today. Okay.